Hey everybody, I hope you're all doing well. Thanks for tuning into my YouTube channel today. In this video, we're going to be discussing the Fibonacci retracement tool. I'm going to share with you my exact settings that I utilize in my strategy and how to actually apply it to real-time charts. Now, I've actually made some recent changes in the way that I utilize the Fibonacci tool. So make sure you stay right till the end of the video because I'm confident you're going to gain a lot of value and insight from this. And without further ado, let's jump right into it. All right, guys and girls. So before I dive into how to actually utilize the Fibonacci tool in potential trading opportunities, I want to pull up my settings for the Fibonacci tool so that we're all on the same page and we're all looking at the same thing. So I understand at first glance this might be a bit overwhelming because we have two columns here filled with plenty of random looking numbers. However, the way that I utilize Fibonacci is 90% less complicated than everybody else you'll see on YouTube. I literally only utilize one retracement level. This is the minor change that I've made recently though. So in my previous videos, you'll notice how I was using the 71% retracement and then sometimes also the 79% retracement. So I would have those two levels on my chart at all times. I would always set a limit order at the 71% retracement because I would be analyzing trading opportunities well in advance. So I'd set limit orders. However, I'd utilize the 79% sometimes if I were approaching an opportunity in real time and it was a market execution, right? So that's when I would utilize the 79%. However, I've now ditched both of those and kind of consolidated the two of them to the 75%. So it's kind of the halfway point, but there's a more specific reason than that. If you look at the risk to reward tool here, you'll see that it's a perfect 1-to-3 ratio. So that to me is very satisfying. My previous fixed ratio was 2.45R, and that was at the 71% retracement. Now it's a perfect 3R by simply moving my limit orders to the 75% retracement. I interrupt this educational video to give you guys an update on my Aquafunded challenge. As you guys saw in my last video, I started a $50,000 funded challenge with Aquafunded. They've been great so far, really responsive customer support, and their target profit is relatively low. So I'm looking forward to passing this. I'm pretty close right now. As you guys can see, I'm at 4% profit on this account. I actually have a current floating trade as well. So I'm hoping that that passes this pretty soon. And like I said, I'm really looking forward to being funded with them. They've got a wonderful, easy to use, user-friendly website. The user experience has just been great so far. And like I said, customer support is like no other. So I've been really enjoying trading with them, and I look forward to trading with them in the future. Don't just take my word for it, guys. Click the link in the description of this video and go check them out for yourselves. They have Trustpilot reviews, they have their social platforms linked here, and you can scroll through their website and really get a feel of what this company has to offer. Take a look at their evaluation models here, and especially the pricing. Some of the lowest in the industry that I've seen. Again, click the link in the description of the video. It'll take you right to their website. Let's talk about how we can actually utilize this system. It's pretty straightforward, even more so now that I'm just using one retracement level here. The whole reason I started using Fibonacci in the first place is because it was a more simplified method of entering trades and managing the trades. What I mean by that is instead of pinpointing which imbalance or which order block or which whatever you look for, whatever your confluences are, instead of pinpointing your entry based on that, what I care about more is just entering good trades. Right? My bias is correct most of the time. I have a very good understanding of market direction, and I'm typically correct in that sense. So instead of trying to over refine where I'm entering my trades, I feel that it's better to just get involved in those good trades. And if there's a little bit of drawdown, there's a little bit of drawdown. But overall, I'm just getting involved in those trades that I want to be in. So now that I've explained that, I want to get into this actual trade example in front of us. So this is currently on GBP NZD on the 4-hour time frame. This isn't a trade that I personally took. However, many of my community members took this trade. It wasn't on my watch list at the time, but I added it because of how textbook this was really. So I really wanted to go over it and spend some time discussing the criteria behind it. I've already marked up some things on my chart here, a liquidity grab and a break of structure. Now these two go together. So what I mean by that is you don't know that this is a liquidity grab up here until price shifted in the other direction and created this break of structure. At the time, this would have looked like a minor break of structure to the upside. However, price gained significant bearish momentum and broke through all of these lows here, which means this was nothing more than a mere liquidity grab. So the directional bias is clearly to the downside. From that point on, I locate my swing points, which is right here and right down here. Some may argue it would be down here. That's actually where I drew my fib tool from because I like to target the more extreme prices. I'm less concerned with the minute details and I'm just looking at the overall range. But regardless, this is the bearish range that we're currently trading within. So ideally, we would see a retracement back up to the premium prices, which for me is the 75%, and then I would enter short. What I like to look for is some confluence around this retracement level. I don't just blindly enter at the 75% retracement. I want it to have some sort of other confluence around it. The main confluence that I'm looking for to be in or around the general area of this 75% retracement is an imbalance. So you can see that right here. The Currency Pros indicator that I utilize shows the imbalance. It shows the swing points in structure and many more things as well that we'll discuss later on. So in this case, the 75% retracement does not land directly on the imbalance, but it is in the general area. That's all that matters to me. As long as the imbalance is above like the 50% region of this current trading range that we're in, then I'm happy with that. The 75% doesn't need to land directly on something. The way that I look at imbalance is that it's a magnet that draws price towards it. So this imbalance here just tells me there's a good chance that price is going to trade higher up towards this general area and hopefully high enough to hit my retracement level where I set a sell limit order. And then my order would be activated. And then in an ideal world, it would go in my intended direction. So before we discuss this any further, let me play price forward so you guys can see exactly what happened here. So price triggered into this area and there was actually quite a bit of drawdown here, but the structure remained intact. The bearish range that we're trading within remained intact and we eventually hit that take profit. So again, just to clarify, I wasn't involved in this trade. Many of my members were. They alerted me to this opportunity and that's why I'm discussing it today because I think it's a great example of the strategy that we utilize on a weekly basis. So I think one of the main things that people struggle with when it comes to this Fibonacci strategy is identifying where to actually drag the Fibonacci tool to and from. As far as I can tell, that seems to be the main issue that people are having. So I'd like to discuss that briefly. Let me use the replay tool again, bring it back to here so I can clearly identify exactly what we do with the Fibonacci tool. So it all starts with the break of structure, guys. We can see that there was a clear break of structure right here, very clear push to the downside. So that means that we can solidify this area here as our swing high, which the Currency Pros indicator has already done for us. Now, as price is pushing down, there's no solidified swing low yet. That swing low is only printed there by our indicator as price begins retracing to the upside. That is basically what solidifies it as a bearish range that we're looking at. Obviously, the goal in trading is to buy low and sell high, right? So if we're in a bearish range here, we don't want to just enter just because we think price is going to continue going short. We want to wait until price is at a better area for entry. We want to get involved in selling opportunities at a premium price, and we want to get involved in buying opportunities at a discounted price. This 75% retracement level, or basically anything above 50%, represents premium prices that you could get involved with if you're comfortable doing so. So in this current bearish range, for example, as soon as price begins retracing, that's when the indicator prints this swing low. Now, if I play price forward a few more candles, we can see that we tapped a little bit lower there. So it wasn't low enough for price to print a new fractal just yet. However, that's where I drew my Fibonacci tool from because, as I said before, I like to focus on the more extreme areas of price just to be a little safer. I like to have the extreme ends of the range. So once that's done, I'll draw the Fib tool from scratch here so you guys can see it. You click the Fibonacci tool. In a selling scenario just like this, you would start from the swing high, click it, and drag it all the way down to the swing low, which in this case is going to be this wick right here. And it really helps to enable magnet mode on TradingView because that makes your mouse snap right to the highs and lows of each candlestick. Then what I like to do is double click it, go to coordinates, and literally click the arrow on my keyboard and just extend it outward into future price because I think it's more aesthetically appealing that way. And also I use those levels to frame my position tool on TradingView. So as you can see, this is the sell position tool, or the short position tool, should I say. Let me delete it and start it from scratch. I literally place the entry at the 75%. Again, using magnet mode, I click the stop loss and I drag it and snap it right to the high of the current range that we're trading within. Now the take profit level, I click that as well and drag it all the way down to the low of the range right here. Again, using magnet mode, it should snap right to that wick. So that gives us a perfect 1 to 3 risk to reward ratio. So this is how I use the Fibonacci tool to actually frame my trades. It's not just for figuring out the best place to enter, it also helps me frame the trade. And I do this because my stop loss should be placed at a point of invalidation, right? That in this case would be the swing high of this bearish range, because if price were to continue higher than that, that would mean that I'm incorrect in having a short bias on this pair. And the take profit level, it's literally just set at the point of least resistance. Like, it's very highly likely that if we're joining a healthy trend, if our bias is correct, then the low of the range should be taken out at minimum. And again, I'll play price forward so you guys can see what happened. Tapped into that premium area and then hit the take profit eventually. So this was a very textbook setup, definitely more drawdown than I would like to see, and that's not typical with this strategy. However, it's completely fine. As I said, the stop loss is placed at a point of invalidation. So as long as the stop loss hasn't been hit, obviously the trade idea is still valid. So this was a pretty clear example of how I utilize the Fibonacci retracement tool in congruence with my other confluences that are part of my strategy. And this is on the 4-hour time frame. Now I'm going to do something a little extra for you guys today, and we're actually going to look at an example on the 15-minute time frame. As many of you know, I have two different portfolios. I have a swing trading portfolio and I have a day trading portfolio. I have many different accounts within those portfolios. There is personal accounts as well as prop firm funded accounts. So I'm pretty diverse in that sense. Years ago, I was a day trader. Well, I was a day trader for the majority of my career, really. And only recently, within the past year, I made a full transition towards swing trading. However, I feel that it's a good balance to just do both. I don't want to day trade on super low time frames. I think the 15-minute is the lowest I would go. I've always had great success on that time frame. And I also think that it pairs very well with the 4-hour time frame. If any of you guys are familiar with my channel, if you've watched my previous videos, you should know that one of my most popular videos on my channel is a step-by-step trading plan and strategy using the 4-hour and 15-minute time frame together. So I definitely favor those two time frames. So I use the 4-hour for strictly swing trades, and then I use the 15-minute time frame to take intra-session trades based on that higher time frame 4-hour bias. So I'm going to show you guys a glimpse of what that looks like, but we're going to do a full feature video on my day trading strategy in the very near future. So you can look forward to that. But let's take a look at the 15-minute example that I'd like to show you. All right, I got up to put a sweater on. I was a bit chilly, but let's get into the 15-minute examples. I'm excited to show you guys this because I get so many questions about whether or not you can use this strategy on other time frames. And the answer is always yes, guys. Price is very fractal. The same patterns you see on the daily time frame are the same patterns you're going to see on the 5-minute time frame or the 15-minute time frame. The difference is the win rate is going to vary. When there's more frequency, which means taking more trades, there is going to be definitely a variance in your overall win rate. So my win rate is extremely high on the 4-hour time frame. I don't lose that often. It's extremely rare that I incur a losing streak, and I'm very grateful for that. And that's why it's very peaceful for me. It's a very easy strategy to implement, and it gives me a lot of time freedom as well. But if I want to be a more active trader, I can drop down to, for example, the 15-minute time frame, which we're looking at now on GBP USD. So this was back on Tuesday, which was the 20th of February. And this was in the early morning hours of New York session. So this was a very clear pattern that presented itself. Now, the thing is, with lower time frame strategies, you can't just trade on that single time frame. Well, you can technically, but it will be a much lower strike rate than if you were to pair it with a higher time frame as an anchor time frame. You need to anchor your bias to the higher time frame narrative, right? And so that's why I recommend to use the 15-minute with the 4-hour time frame. So as you can see here, the Fibonacci tool has been set up in a buying scenario. So that means we're looking to go long on GBP USD. But then we have to toggle to the 4-hour time frame and think to ourselves, ask ourselves, should I say, does that make sense to be buying on the lower time frame? Does that line up with a higher time frame bias? So on the 4-hour time frame, we can see that we were within this bearish range, and we were looking to go short potentially at these premium levels here, right? Or even if we're not interested in taking this trade, we're at least expecting price to trade higher until it gets into these premium levels. So with that being said, we know that we can, on the lower time frame, look for long opportunities until we reach that higher time frame level, which in this case would be the 75%. So with that higher time frame perspective in mind, like I said, we can be buyers on the lower time frame. So that kind of validates this setup that you see in front of you right now. Now, let me discuss the actual setup itself here. So first things first, it seems as though we have a sweep of liquidity to the downside here. And the reason I'm able to say that, I keep repeating this in my videos, guys, the reason I'm able to identify this as a liquidity grab is because price violated this low right here that I drew the arrow from. Price clearly violated that low, but not in a very strong manner. But the more important aspect of this is that immediately after doing that, price impulsively broke to the upside. You can see there's a break of structure label here, which I'll get into in a sec. But this is the big factor to pay attention to. Price violated this low, but instead of continuing to the downside, we pushed up impulsively to the upside, breaking through previous structure. That means we're able to verify that this is a liquidity grab. Now let's move on to the current price range that we're in, which is from this swing low here to this swing high up here, right? This is the range that we're trading within. So it's a bullish range and we're looking to buy at the 75% retracement level. We can clearly see that there's plenty of imbalance within these candles here. So that's a good draw on price. It means that I'm confident price is going to at least get into these discounted levels where I can be a buyer. That's pretty much the premise of what I'm looking for. I've identified a liquidity sweep. I've identified that there's a break of structure to the upside. And now I'm waiting for price to get back down to those discounted levels so that I can be a buyer. Now, let me double click this Fibonacci tool because it's not the average Fibonacci tool. This is actually the Currency Pros indicator. I've coined this strategy the Currency Pros Golden Zone. So that's what this indicator is called. Myself and my community, we kind of came up with that name. Just suits the style, especially the colors too. So this is the Currency Pros indicator. And by the time this video is out, these major updates that have been implemented in this indicator will be available to all Currency Pros members. Now, before I go through the settings on this indicator and show you what it's really all about, anybody who's been here long enough knows that I'm not the average, salesy marketing guru on the internet. That's not me. It's very disingenuous. So I try not to push things too much on social media. But guys, this is going to be a game changer for so many people. This is literally eliminating chart work from your trading, and it really simplifies and streamlines the process of trading almost to the point of automation. This indicator shows you all the structure in terms of swing highs and swing lows. It's been set to a setting that favors the extreme swing points, and it is very conducive to successful Fibonacci trading with this strategy. So the sensitivity on this setting has been fixed, it can't be adjusted, and for good reason. Now we have break of structure labels, which are also pretty straightforward. As you can see here, it's automatically printed. And we have our Fibonacci settings here. So there's currently only 2 levels because I really don't think you need more than that. You can obviously adjust them to whatever you want and enable both or disable one or disable both, whatever. We also have a section for order blocks and fair value gap, as many like to call it, rather than imbalance or just gaps. So yeah, this is a glimpse at the Currency Pros indicator, and it literally prints these opportunities automatically. As you can see, if I click on this Fibonacci tool, I can't drag it around, I can't edit it. It's fixed in place because the indicator printed it there. So it identifies these opportunities for us. It's literally been coded to our exact strategy. Very simplistic, yet very, very effective. So I'm telling you guys, click the link in the description of this video, get into the Currency Pros Academy and community, because you're not going to regret it. I don't push these things too often. I take the more passive approach when it comes to business in terms of promotions, but this is something that's been in the works for quite some time, and I'm really excited to share it with you all. Let's actually set up the parameters for this trade. Stop loss at the low, take profit at the high for a 3-to-1 ratio. Actually, let me go back to the settings here. I'm going to extend the Fibonacci tool outward. There, just gives us a little more room to play with. And that extension, as price moves forward, that extension follows it. So it'll always be that far out. So that's very nice for aesthetic purposes. So let's play price forward and see what happened here. Right, so right there we got tagged into the trade. Very minimal drawdown actually. Clearly price, reacted to this down close candle, which some might look at as an order block. That's cool. I don't pay too much attention to order blocks anymore. I'm more focused on the imbalance that draws price into my retracement levels. That's really all I care about. So very minimal drawdown here. I love to see that. And very, very, very quick take profit, guys. And then as you can see, the indicator printed a new zone now. So we have a new break of structure and a new fib tool has been placed here. Now there hasn't been a full retracement yet, so this fib tool is going to continuously adapt until there is a strong retracement. So it's going to go higher and higher. The range is going to extend until price begins to trade to the downside, and then that fib tool will be solidified, and then you can take the trade. So it's very straightforward, very cool. I'm so excited to share with you guys this information. Now we're going to take a look at one more example using this 15-minute style entry system. Now for the last example of this video, utilizing the 15-minute style entry, I wanted to showcase the S&P 500 because another frequently asked question that I get is, does the strategy work on assets other than Forex pairs? And the answer is absolutely yes. So let me show you exactly how that works. So as I said, this is the S&P 500 just on the 15-minute time frame. We're not doing on any of that 1 minute or 5 minute scalping. This is the 15-minute time frame. It's very easy to understand. Let's take a look at what's really happening here. On the 15-minute time frame, we can see that we've clearly swept liquidity to the upside, right? Once again, I can only say that because we experienced a clear break of structure afterwards. So that means that this was just a liquidity grab. Now, after that break of structure happened, we can identify that there was clear imbalance here, as the indicator has so kindly visualized for us. Now we have our swing point here, our swing high, the top of the range, and the swing low would be down here. However, I think we have to play price forward another candle or so in order for the indicator to print that. Yep, there we go. So it requires a bunch of candles to consider it an actual retracement, and then it prints that swing low there. So now that we have that, we look for our premium price that we'd like to enter short from. It's clearly landing right on that imbalance, which is very, very nice. So all the confluences are lining up here, guys. We see the liquidity grab, break of structure to the downside. The sentiment of the market is very clear. It is 11 o'clock. That's a little past the window that I'd like to be entering when it comes to indices, because the New York equities market is 9:30 Eastern Standard Time. So this is 11:15 Eastern Standard Time. However, it's still valid to take until the end of the day. Volume picks it back up again in New York session during anywhere between 1 and 3 p.m. typically. So this is still valid to take. I'd prefer it in the morning portion of the session, but the afternoon is still valid as well. So let's set up a short position here and see what happens. Stop loss at the high, take profit at the low, and of course the entry right in the middle there. Let's tweak the entry so we can get an even 3R. There we go. And we'll play price forward and see what happens. So would have tagged the order in there. And what time would that be tagged at? 11:30. So not too bad. Right before noon, which is when volume typically slows down a bit. But as I said, in the afternoon portion of the session, things pick back up again. Okay, interesting. So we definitely traded higher than that and clearly reacted to this order block up here. So still well within the bearish range that we were targeting. And this is why I like to enter at that 75% or any Fibonacci number that is a deep retracement number, because it allows you to not be too precise, right? If we're too precise, if we're over refining all the time, we often miss entries or we have our stop losses way too tight, and that's very unprofessional as well. So we don't want that. Precision is nice, but what matters more is just being involved in good trades, right? Let's continue to play price forward, and the final TP was hit there. Now you can see that the Currency Pros indicator is still printing new Fibonacci ranges as we're breaking structural lows. It's providing new scale-in opportunities. I hope the examples that I provided in this video have been clear and concise so that you guys can really see how I utilize this very simplistic strategy. I'm not holding anything back for you guys here on YouTube because none of this information is really proprietary. I didn't invent any of these things. I didn't invent Fibonacci. You could call this strategy many different things. The person who you think created it also got it from somebody else. There's really no reason to gatekeep this information. You can research what imbalance is. You can research what a break of structure is. It's all available for free online. I'm not concerned with sharing any of this for free on the internet. I get satisfaction from it actually. So I really hope you guys enjoyed this video. I hope that this was able to provide you a clear path from start to finish on how you can utilize the Fibonacci tool to really simplify your trading. And when I say simplify, guys, I truly mean it. This barely feels like work to me anymore. Like trading is so easy when you do it like this, especially on the higher time frames. Of course, the lower time frame style, like the 15-minute, that's a little more time sensitive because you typically have specific windows in a session to really trade with good volume. So that's definitely a little more time sensitive. And I'm going to do a full video on my day trading strategy very soon. That's probably going to be one of the next videos that I do. So stay tuned for that. It's going to be jam-packed with more details regarding these examples. But if you wanted to stick to the swing style on the 4-hour time frame, that is the least stressful way that I've ever traded. And I can see myself doing that for the foreseeable future. It's very, very passive. Doesn't even feel like I'm trading sometimes, yet it's more profitable than anything else I've ever done. So I really can't say enough good things about it. It's fantastic. So again, I hope you guys really enjoyed this video. I enjoy making these videos, and I really hope that you guys hit that subscribe button, comment down below, hopefully something positive. I hope you guys enjoyed this, and I'll see you all in the next one.